Guys, welcome back to another stream. A little bit of a rough day today. 7.3% down after though a couple of really solid green days. I know a lot of people have been talking about that. I think Trey was talking about that retest. I saw him tweet about this. The retest of, I think it was 48.50, and then a low in the $42 range. But again, a lot of people are treating that $48 mark and in between 48 and I believe 52 to 53 as that new $14.50 from the June run up. We break that with momentum, blue skies ahead. Let's see. How we feeling, everybody? We doing all right? I'm willing to try anything to double my position. Big J, be careful there. There's a lot of people out there that are gonna be careful what you say there, buddy. What's up, Cowboy of Space? How we doing? Let's see. Anyone looking at Emma? Let's see. All right, let's do a little bit of a quick Ortex update. All right. Ortex. Utilization 92.08. Coming down a little bit. Little bit on the downtrend on the utilization. It's kind of been bouncing in that like 91 to 93% range. And like, it's still really high. Like the amount of shares that are out on loan right now compared to other stocks, for AMC, it's very, very high. Now, we're not seeing the like high utilization reflective in the cost to borrow yet. We're really going to have to see the utilization up above 95. 95, 98, anywhere above there, that's when we're going to see the pressure put on a lot of these institutions, not only the lenders, but also the hedge funds. So then we are looking at the estimated short interest as a percentage of the free float, 16.87%. So again, still very, very high. Yeah, we had to... streams are going to start a little bit earlier from now on. We're going to start them at 7 because like I have schoolwork to do now. It sucks. I hate it, but I'd rather be on here. But yeah, it's going to be a little bit different now. Let's see. Oh, what's up, Chris? Shout out to mods. STV in the building. Let's go. What up, Trapping on Wall Street? Yeah. So for those of you guys just trickling in right now, if you guys don't mind, just dropping a like on the stream helps us out, get some more people in here. So I really, really appreciate it. The new 1%ers in the house. Guys, when we squeeze, also, here's the other thing. Well, I've been like walking around campus and I've seen just like this white Lamborghini Huracan rolling around. And I'm just thinking to myself, it's like, what have I done wrong? To not have a Lambo in college. And then I think to myself, could be close. Who knows? Don't forget to buy calls on the like button. There we go. Yeah. So I'm going to rant a little bit tonight. Just from what we've seen today, like this price action, it's like, it's fake. Like who's selling? Like it blows my mind. It's like, okay, we have a really big group of people that are waiting for this giant event that has never happened before to happen. And the implications of that event is everybody becomes filthy rich. So those people, most everybody understands the implications of this situation. So and like when you think about it, it's like, oh, if it can go to these crazy high levels, I would want to have as many shares as possible in order for me to make the most money, to basically like have a buffer if you like mess up during the squeeze. Like if you can't take it emotionally when this ends up happening, you have like a little bit of a buffer in terms of like, oh, I have more shares to wait for like the potential to have it go to crazy numbers. So in my opinion, institutions 100% are not selling. It's not happening, especially right now. We saw a lot of these big institutions that already had big positions in AMC before the June run-up have a very significant increase in their positions according to their 13F filings in the last quarter. So they held from 1077 down to 50, I believe, was around what June ended at. Okay. So now when you think about it, well, we're at 43. They've bought more. They are obviously expecting it to make a new all-time high. So it doesn't make sense for them to sell right now. Retail, there could be some retail selling going on, but I highly doubt it's a lot. I think there's a lot more retail buying than selling going on. And then when you've looked at Ortex over the last couple of days, and the utilization has been going down, meaning there's less shares out on loan than there was before. It jumped up yesterday. It came back down today. But when we look at the borrowed shares every day, it's like 1 to 2, maybe 3 or 4, like 1 to 3 million. That's not anywhere near close to what we saw when potentially, I believe it was, I think it was Virtue potentially took those 14 million shares on loan. So it just does, like, it's mind-boggling that, one, we know that institutions and retail aren't really selling, and two, we also don't see that many shares going out on loan reported by Ortex. So it's like, how are they pushing the price down right now? Well, it could be synthetics. It could be counterfeit shares. They could be creating new shares to flood the market with supply in order to try to get it down. Who knows? Maybe retail just wasn't buying today. That could have been it too. Retail and institutions, maybe they weren't pumping the market full of buy orders. It's very possible. We saw that that buy imbalance yesterday, I believe. So maybe like retail and the FOMO was hitting so hard over the last couple of days that maybe retail needed a little bit of a breather in order to, I don't know, get some of their gains out of SPRT or BBIG to put into, like, it's just a very weird dynamic. I have some other stuff to say on that too. Wall Street Viking, what's up, man? Thank you so much for the super. Shout out to all you guys who send in those supers. Without you guys, we wouldn't be able to keep doing what we do. So thank you so much. Wall Street Viking says, what's up, brother? Not much, man. I like buying dips. Me too. They can drag it out, but that's it. 100%. There's like nothing they can really do at this point. It's just a delay, a delay, a delay, a delay. And as they delay, they make the problem even worse for themselves. They might be able to try to like figure out a way to stay in business or working with these different government like agencies to figure out how they're going to get out of this absolute mess without basically crumbling the entire economy potentially. But who knows? They could have covered at these much lower levels, and now they're kind of trapped in these higher levels. 43.69, we're at 43.71 in the after hours, up 2 cents. The other thing is, let's think about something very logically. There's been a debate for a while at which squeeze play is the best one. GameStop, AMC are the top dogs. Now, GameStop was the original one. AMC kind of came along after as people started to figure out these types of situations, like the potential for these squeezes. So when we think about what's going on with these funds and the price movement, here's what I think is going on. So GameStop or AMC runs. Okay. One of them starts to go. Just like a normal breakout run, whatever. So the whole market is basically run on a couple of different algorithms, and Astro has been able to figure out some of this. Again, I'm still like hoping that he's right. We've seen this bullish breakout on that cycle theory. I think I've seen a couple of new cycle theories pop out as well, like revolving around volume and then GameStop's earnings. But I do believe that there is a cyclical aspect to what we have going on. Here's the thing though. The so-called smart money who could be over leveraged on these shorts know what these price movements are going to be. They know that retail is focused mainly on AMC and GameStop. So if one of them starts to go in a very big fashion, they think in their mind, the other one's going to go too. So then it creates a self-fulfilling prophecy where it links these two stocks a little bit. It kind of like, it like pins them together. So they're going to move in tandem. Like they might like bounce a little bit, like one will go up more than the other or down more than the other. But what happens is that if they're going to cover short positions and they have short positions on both or all of these meme stocks, they're going to think, oh, the other one's going to go up too. So then they cover the short. So it doesn't even necessarily like mean that like, oh, GameStop goes up, AMC goes up. Well, no, they're just creating this self-fulfilling prophecy or this positive feedback loop of, oh, one starts to go, we think the other one's going to go too, because we've seen what happens in the past. So start to cover a little bit on this one, and then they both go. Any new news on GME ETF, says King Vortex. King Vortex, good to see you back in here, man. I heard S&P 500. Honestly, I did hear something about GameStop potentially being added to back into the S&P. That would be really big. Also, we have GameStop's earnings coming up, and when you think about squeeze catalysts for GameStop, typically what I've heard, I haven't looked at this too carefully, but after GameStop's earnings, we typically see a sell-off. We'll see these run-ups with like AMC and GameStop. This is like part of the cycle that people have been talking about, and then a sell-off after, and that starts that next downtrend. What blows that out of the water and makes all of that irrelevant, the previous cycles that we've had, is the announcement of GameStop's special dividend or whatever they're going to do. Now, a lot of people have been thinking, well, it could be that NFT crypto, similar to what Overstock did. I think that the evidence is there that suggests that it's very possible, because I believe that people have found the wallet. But regardless of that, they have an NFT site up already. So they are preparing for something. Nepal, thank you so much for the super, man. I really appreciate it. Gotta support my guy. Thanks for all you do, dude. Anytime. That's what I'm here for. But thank you so much for the super. Yeah, sympathy play. That could be what you would call it. But at the same time, you got to think about how they're doing things, like how they're positioning themselves in these different run-ups. The other thing that is just so mind-bogglingly dumb is this article that I brought up in my video today. Whoever this stupid firm is downgrades AMC on poor box office. Hey, dummy, it wasn't poor. We've seen pandemic box office record. It's like, what are you on right now? Have you not noticed that AMC's raised a bunch of money? Have you not noticed that Adam Aaron is working on all of these different types of things to make AMC even more relevant with the MMA fights? They're going to try to do sporting events as well. Have you not heard that they're cutting their underperforming theaters, and the theaters that they're opening are in the highest performing districts? Have you not seen the proof of that actually happening? Have you seen AMC's on-demand service? Have you seen, like, it's like, all right, dude. And then they predict an 80% stock decline. And like I said in the video, just short it then. Do it. See what happens. Go to one of these prime brokers, take out a loan of shares, and sell them into the market. Just do it. Like, you want to come out and think that you're going to have the stock's going to have an 80% decline? Put your money where your mouth is and short the freaking stock. We don't need you to come out and just say this just like stupid information that's just like completely wrong. And then just be like, oh, it's going to go down 80%. Okay, well, a bunch of people on Reddit, YouTube, Twitter, Discord, who have most of them no financial licenses, no experience in the financial industry, are saying, no, you're wrong. We've been buying this since like between $2 and $5 a share, and we think it's going to go a lot higher than what it is right now. And we've been the ones that are right. Like this is why it's like, it just like, it doesn't make me angry. It's just like, the stupidity just frustrates me. It's just like, come on now. Create alert. I don't want to create an alert. I watch this thing all day long. I'm good to go. Oh, Autospot. Thank you so much for the super. Damn STV going off on these people. Yeah. It gets to the point where you'll just see it and be like, all right, like you put your money where your mouth is. I'll put my money where I think it's going to go. And we'll see who the market determines is correct at the end. And here's the thing. You overshort a stock at a hedge fund and you get blown up. You know what happens? And your hedge fund fails? You no longer have a job. Your livelihood taken away. And you would think that these people would be smart enough to realize and do the research on the potential of these situations and realize that, like, there's a big community behind GameStop. There's a big community behind AMC. They do research all day long, and they've been doing it for months. And there's a lot of them that, they're probably onto something. And when you think about, the highest performing hedge fund of all time, Renaissance, they tripled their position in AMC. If I was a hedge fund and I saw that Renaissance was buying AMC, or honestly buying anything, I'd be like, I wonder what they're thinking there, because they're probably right. But the other thing is that, think about this. I know a lot of people have I know a lot of people have gone, like, quote unquote all in on AMC, but a lot of people have put in what they afford to lose. In the off event that something doesn't work out, or it takes too long for people to really hold out, like, the people that have, like, a lot of people have not put their entire life savings into this. So you know what happens? They take a loss on a position and they move about on their lives. That's it. We have the research, the community, and one of the greatest enemies that you can have is somebody who doesn't have anything to lose. It's just the worst bet of all time that they've taken. So that's my rant. Those hedgy tears still taste real good. Jeff says, I've worked in DC and New York, and I'm sure that article was paid for by somebody who wants AMC to go down. I would not, I would not put it past them at all. 10 out of 10 rant, would recommend. You're too young to rant. Rich, fine. Let's see. I paid the price of admission. I plan on staying until the ride comes to a complete stop, even if it's an extra long line due to unforeseen circumstances. Yep. Let's see. All right, Chris. Whoa, hold on. Let me see what we got over here. Yeah. Okay. The STV rant equals angry chipmunk. All right. Imagine going to AMC to watch the movie about AMC. It'll be about, like, short squeezes. AMC will be mentioned. I also think that once the Apes Together Strong documentary is released, I think for, like, it only should be aired in AMC theaters for an extended period of time, like a month, 2 months, if it's going to get released out to everybody. I think that would be really cool to have viewing parties of the documentary that the Mulligan brothers are putting together. Who has better rants, Matt or STV? Probably Matt. Matt's done more of them. I just come on here and I just like yell at FUD articles. Like Matt has to do a lot more ranting because he gets a lot more BS in his chat. You guys keep it cool most of the time. Okay. Let's talk about that Adam Aaron with the shares to the third party situation. So he's old. And he needs to diversify some of his assets so that his family is taken care of. That's all it is. I saw the argument that, oh, he's rich. You know what rich people do? They protect. When very, very wealthy people have a bunch of money, they have something to lose. They have a family they need to take care of. They want to make sure that their legacy, the money that they have made, lives on. And the smart way to do that is diversify your assets. You can't have like even though, most likely AMC is going to go up to these crazy high levels and everybody's going to make a bunch of money. But at the same time, Adam Aaron won't be able to capitalize on all of that position. He's just not going to. If he has one of those like trading plans where it's like scheduled out for how many shares he can sell at a time, he's not going to be able to fully capitalize on the squeeze. So he knows that. And even though he has a boatload of AMC right now, eventually after the squeeze, it's going to come back down to normal levels and he's still going to have a solid position. So what very, very wealthy people do is they no longer focus on growing their basket of wealth. They focus on protecting it. They create like a fortress around it that's going to provide safety for themselves forever. So that's what he's doing. Ken, thank you so much for the super. I really, really appreciate that big one, man. SCV, calm down and don't just take a seat, take 2 seats. That's how that works, right? I guess so. KC, what did you say? Oh, trade spotting does have the best rants out of anybody. Let's see. Who's the grandfather ape? You think he waited until now to diversify? He's been wealthy for a long time. And he likely has a robust estate plan. Okay. Well, whatever you want to say. Like you can say it's good, you can say it's bad. He's still gonna own a bunch of it. It's like, come on, guys, don't spread FUD. I just want to hear your thoughts on Tattooed Chef and its Ortex. I don't know too much about the company. I'm pretty sure it has to do with like meal planning. I know the ticker though. Okay, hold up. How can it have 35% of the free float on loan, but 37% short interest, 99% utilization? I mean, oh, and the cost to borrow is ridiculous. All right, that could be a decent squeeze play. What are the FTDs like? Nothing right now. So that's a weird one. I'd have to take a deeper look into that. Nepal, can you be a mod? Yeah. Nepal, you can be a mod. I'll mod you. I think that, what do you call it? Trade spotting has the best rants. Man, I keep finding I have more shares, less cash, and more account value. Weird. Ethan, I feel you, man. Guess what? I think at the current time, let me just check real quick what we got for my cash balance. I keep having to like deposit more because I'm just like, I want more shares. My cash balance right now, I put it out on my Twitter today. $1.98. That's what I have in cash in my account. So what is your opinion of the videos yesterday being titled with so much hype? Don't you think that A sets up community for disappointment and B sparks YOLO call options? I mean, I don't. If you're talking about my title, like it's literally like margin calls start today. Yes, they do direct from the DTCC with the OTC derivatives with phase 5 UMR. It's right there laid out for everybody. And I feel like over the last probably 2.5 weeks, we've made it abundantly clear that that's not a squeeze catalyst. That's a slow bleed out of liquidity catalyst of all these institutions that we've already seen start to play out. And there's been a lot of speculation. I think some people have been able to prove it. I just haven't seen it yet. So I can't like speak on it fully, that they're using these OTC derivatives in the form of swaps to either hide FTDs or open new naked short positions. So, and those are OTC derivatives. And if they're going to start like increasing the initial margin and the margin calls on those OTC derivative positions, it screws a lot of these institutions. And then there's the CFTC thing where, again, when we're thinking about any of these like notices or proposed rule changes that come out, there's not going to be like one thing that like there's not going to be like one specific rule that causes us to squeeze or harms the squeeze. Patty says not yours at all. That's why I'm asking your opinion. I was talking about, I mean, from what I saw, like, yeah, AMC is ready to explode. like it is ready to go. But like what you have to realize is that we have green day. Like just look at the daily chart here. This is GameStop. I'm an idiot. Look what we've seen. We've seen green day, big green. So we had 1%, 6%, 8.77%. But we've seen like it's been up higher in the intraday. So it is ready to go. Like that, like one red day is not going to hurt anything. Like, look, when we look at these red days, like right here, look at this. We had a 13% day, 20% day, 19% day, 35% day, and then a down 1.5%. But it didn't really do all that. Like it didn't really hurt all that much. And then we ripped. We're going to see red days. And when we're squeezing, we're going to see even more aggressive red days. Did the FTDs increase today by 1,000%? I haven't seen anything that they have. I saw an article that they did, but I looked into it. Like I looked at what Ortex had, and it didn't it didn't show anything crazy. I'd have to take a deeper look into that. Let's see. Hey Vix, I heard that the first hedge fund to cover will lose less money. What's your take on why none of them are covering at the moment? Is because they're helping each other. Yeah, it could be. One thing is that when you think about like hedge fund covering, if one does it, it starts the domino. If one has like even like a decent size short, and they start to cover, it's going to force more to cover. And it's just going to keep knocking those dominoes down until we get up to the high levels where the big dominoes fall. So think about like a row of dominoes where the first one's small, the second one's bigger, and each one just keeps getting bigger all the way to the top. That's kind of what we're looking at here. The first one falls, knocks down a bigger one, and it just keeps going. Friday margin call should be fun. Yeah. It's good. But again, it's not going to hurt any of these like giant players. It's going to hurt the smaller players for a longer period of time. It's not like they're going to have to put up, let's just say like $5 million for how many accounts that they have. And that's going to cause them to like, oh no, we have to cover our positions. No, that's not really what it means. But with the minimum, it just sets a minimum. So the actual requirement could be even higher. And here's the other thing. We've gone over this in the past, that Alpine, that comment section from Alpine essentially said that they've been notified by the DTCC on 2 separate occasions that those minimum capital requirements could go up to $10 million. So they think that NSCC 005 with the 250,000 is just a baby step. Now let's see if they actually do anything and how this first step goes with NSCC 005. But we're in for a lot of interesting, like I called it a perfect storm in yesterday's video because let's see if I can name off all of the good things that we have going on right now. Phase 5 UMR, NSCC 005. Technical or like a reversal in AMC, we are now seeing that bullish trend. We are seeing a lot of options. We are seeing the debt ceiling issue. We are seeing inflation, evictions. What else? What else is there? Riptide, thank you so much for the super. I really appreciate it. Shout out to the mods. There we go. 10 million just before January 2022. Oh, the legend says payday tomorrow. I know what that means, STV. I do. I understand that part logic of it. I'm just curious why no one is covering and save themselves. Let's say Citadel to cover tomorrow, and they won't be in danger of needing to cover at 500. Because we don't know here's the thing. We don't know the scale of their short positions. we don't know, like the big players not going to be covering because they know that once they start in a widespread, like a big scale to cover these like massive short positions that they could be holding on their books. It's like, let's say you wanted to buy a crazy high amount of AMC. If you start buying it, you're going to wipe out the ask over and over and over and over again, and you're just going to stair step the price up and mess up your fill. It's the same thing with covering a short with those buys. If you have a really big short position that you need to start covering, you're just going to go up to the ask, wipe it out again, wipe it out, and you're just going to keep stair stepping it up. So once you start, you can't really stop because the price is going to go and other people are going to have to cover too. But the smaller shorts have been cycling in and out. Let's take a look at, let's go back to AMC's Ortex. Like just based off the Ortex data, we know that some shorts are covering their position and returning their shares, especially with this June run-up. Big drop in utilization means that a lot of shares were returned. We see utilization go up to 89, back down to 86, up to 91, down to 86, up to 93. Where is it? Down to 90, then back up. So that shows that there's this cycle of shares going out on loan, being shorted, covered, and being returned. Some of them may not be shorted. Like that is entirely possible that some of the shares that go out on loan aren't shorted, then they just get returned after paying the borrow fee. But some of them are covering their positions, like in small amount, like the smaller short positions. But the big ones have not. And Ortex isn't really going to give us an understanding of how many counterfeit shares could potentially be out there. Can someone explain the Vanguard cryptic thing? Pam Reyes, what's that? I got invited to the Rich Greenfield block party today. James, definitely go to that and let us know how it goes. Be respectful. Don't say anything stupid. You just need to be a fly on the wall. Push in. You didn't miss too much, man. Thanks for the answer. Much love from Denmark, Vix. Thank you, Music Boy. Also, if you guys don't mind, just dropping a like on the stream. Again, cost you nothing to do it, but it really helps us out, get this information to more people, get some more people in here to have some fun, get prepared for what we have tomorrow. So thank you to you guys who have already done that, and thank you to you who are going to. It really means a lot. Let's see. We still have the momentum, and it's oversold. On what time frame? Let me throw the RSI up here. Wait, I don't even know if I can do this on this chart over here. I have to switch it up. Hold on. The daily, let me just look at the 3 month below 43. So it's below 50. 1 month, pretty low. Year to date. Come on. They're going to cut my internet. I swear. I'm moving too fast. That's annoying. Come on. Come on. There we go. What was the year to date we were looking at? 57. Okay. So it is still in a decent range. Let's see. Brian, thank you so much for the super chat. SPR T just covered some shorts. It just jumped up. Ooh. I mean, these stocks, I was talking to Ben about this. Oh, yeah, that could be definitely a little bit of covering. Yeah, Ben and I were talking about this, that like SPRT and BBIG just have been moving in the after hours. Like, let's see. BBIG down horrendously in the after hours. Easily can come back up. But remember all of your guys' question yesterday about like BBIG and if you guys should like hop in on it. Like, Yeah, obviously it could continue to go up. Obviously, it could have easily just continued on that uptrend. But let me look. What did we end up? I wasn't even watching BBIG today. I don't have a position in it. Up 15%. Awesome. If you guys got in on it this morning, I believe there was a little dip right here. If you got in this 7 range, went up to 1190. That's a big spread that you could have taken advantage of. Congratulations to everybody that killed it. Is there any way to get an idea of how many illegal AMC shares exist? We would have to have one of those say votes where every single shareholder, institutions, and retail would have to vote. And then we would get an accurate understanding of what the potential amount of shares would be. But that would be so hard to do because there's so many shareholders. Thoughts on AMC for tomorrow? I mean, after this sell-off, I easily think we could see a decent run up. Or we could just bleed out for the rest of the week. And then next week we have like Monday, Tuesday, Wednesday, and we start that big rip up. Nobody really, like, I don't think anybody can really give a good a good estimate of, yeah, we're going to go. It's like, hold on. There are too many moving variables here to really determine when we're going to rip. We can get a decent idea of the trend. Like right now, we're in this upward trend. We've broken above these levels. We're kind of consolidating here. There's a little cup and handle forming. And if we can continue to break up, we would continue to go. But it's equally as possible that we see another red day tomorrow. Chester, thank you so much for becoming a member, man. I really appreciate it. Monday, the market is closed. Yeah. I know. Sorry. Market's closed Monday. Brian, thank you so much for the super chat, man. I made $6K on BBIG call options I bought yesterday and put it in AMC, bought the dip to the moon AMC. Brian, you're an awesome ape. All these people that are saying, oh my God, why are they chasing these other plays? That's why people do right there. Brian made $6,000 and now he has $6,000 more of AMC. Could he have lost the initial investment that he had? Absolutely. But it worked. And now he has more money to put back into AMC, GME, or any other position that he wants to put it into. Or he could have just taken that money, gone to the casino, and gambled it away. It's completely his decision to do. Honestly, shouldn't matter to anyone if it was at 250 unless the shorts cover. We don't care yet. Yeah, true. The only thing that would really change things is if people have options. So if you're trying to make a bunch of money on options, then yeah, it would change things. But other than that, no, not for shares. Man, I'm going to be so depressed Monday with the markets not being open. Yeah, I'm pretty sure I'm going to need Monday as kind of like a relaxed day. So basically the shorts have to get liquidated for the illegals to get exposed. Not really. Like the thing is that we would have to do an in-depth accounting analysis of every single firm that has a short position on AMC. And right now they're not disclosed. Like we don't know who's like the big short positions on AMC because they don't have to report it. So I don't think we're ever going to know the true number of counterfeit shares that have been basically just brought up from the ether and sold into the market. Unless in like the court hearings, we end up seeing some information get released about this. But by that time, if there's court hearing about this, we're already rich. If you are now filthy rich off of this, are you really going to care how many synthetics there were? Not really. I mean, it would be cool to know what the number was. It'd be like, oh, cool, awesome. I'm going to go back on my yacht now. But again, we also don't want situations like this to ever happen again where they can just basically print free money. Or crypto dividend. For what? Yeah, GameStop, definitely. We are still golden still. People who aren't in are going to be very sad. Yeah, I mean, this could be like a once in a lifetime trade. like my account hit an all-time high yesterday. Like, yeah, I did put more money into it, but the gain got me up to the all-time high in my brokerage account, which is nice to see. I don't think it's going to slow. I don't think that's even going to be anywhere near close to the high that my account could potentially get to. And I think that's the same for a lot of people's brokerage accounts right now. Jay Lopez, thank you so much for the big super chat, man. Wow. Thank you. Not sure why anyone would dislike this stream unless they're short AMC. Informative, good vibes, and reads chat. Great job, my guy. Keep it up. Jay Lopez, I really appreciate that, man. Thank you so much for that big super. Hey, Vix, I have a 403B with about 40K in it. Should I leave my job to roll it in a brokerage account for more attendees? That's direct financial advice that I cannot give you. I'm sorry. Oh, yeah. Crypto dividend might expose the naked shorts, but it would really just be a squeeze catalyst. It would really help out with this, with the whole squeeze catalyst. Let's take a look back at the options again. And here's something that I want you guys to realize. We had almost, let me pull up Stonko Tracker real quick. We had 70 or 80,000 contracts in the money yesterday going into this week alone, just this week. So when we think about what's happened here, there's a hedging process and an unhedging process. So when contracts run close to or in the money, the institutions will buy shares or buy offsetting contracts in order to make that position directionally neutral. So when the stock starts to move in any given direction, they could be trying to pin it at a certain level. The market makers could be, so that the least amount of contracts are expiring in the money. That would be Max Payne theory. Or what would happen here is that the stock starts to go down. They had these hedges on, say they had a bunch of shares. The stock, the contracts run out of the money. They no longer need those hedges on. So they add to the selling volume, and then puts run in the money. And in order to hedge puts that they sell, they need to short the stock in order to maintain that directionally neutral status. So when the stock starts to go down, it's not only the selling volume from the shorts or maybe retail or institutions, which I don't think is very likely, but it's also adding fuel to the fire with the puts and the unhedging of the calls, where the calls get unhedged and they sell, then the puts get hedged and they short. So it's sell and short at the same time, so it doubles up. But it's the same thing on the upside, so it just adds fuel to the fire. It's like a little boost for whichever direction that we're going. Trucking all day. Thank you so much for the super. 20 years ago, because of September 11th, the markets were closed for 5 days. God bless America. Ben Levine, thank you so much for the Superman. I really appreciate it. Naked Charts. The vibe feels like late May, early June right now. Things feel like they're about to get spicy again. Today was a date, so of course it was red. Yeah, I think a lot of people misunderstood. They didn't get it. People didn't get it. And that's like I would get like lots of comments on my videos that were like, one, why are you hyping up this date? And two, why do you keep talking about margin calls? And I'm like, well, don't you want to know that the liquidity is being drained out of these institutions that could be shorting AMC? And two, you are never going to know that there's a margin call happening. You'll have signs of it, but there won't be like a news article that says, oh, like from CNBC or Fox, that's like, oh, let's just use Citadel for an example. Citadel got margin called. No, not going to happen. So even when June was running up and we were talking about, oh, people are probably getting margin called right now because it's relatively impossible for a stock to go from 10 to 77 and there to be not margin calls happening. Like, it's going to happen. Like, they're going to have to put up more capital in order to maintain these shorts. So I think people just didn't get it. And some of it might be the fault of us not being able to like get it into people's heads about what this stuff actually means. But I think too, some people might just be jumping to conclusions at like what a specific word means. Like, I think people still tie margin calls to squeeze and forced covering. And that's not what it is. It's just more money being put into these accounts to maintain the liquidity requirements. Happened to Archegos. Oh, yeah. How do naked shorts become legal shares traded on the market if it's synthetic? That's a really good question. Okay, so for naked shorting, what a naked short is it's not the fault of a hedge fund. Everybody needs to, that is something that everybody needs to understand. Naked shorting, most of the time, like the true way a naked short is created is not the fault of a hedge fund. It's the fault of the lender of the securities, because the hedge funds need to make sure, like, they will call up their prime broker. This is the way, like, I see it, is like, okay, do you have the shares? Can I get a loan for the shares? The prime broker then is like, I don't know. Let me see if I can find them. So then they call around. They're like, do we have shares? Now, if they think that they have shares to loan out, then they will allow that other institution to open up a short position. But if the prime broker or the bank or another lender of securities can't actually get their hands on shares that they can loan out in, I believe, a 3-day period, it then becomes a naked short. So the hedge fund may not even know. It's very possible that they have no idea that their prime broker was allowing them to naked short. It's also illegal to do. Like, naked shorting is illegal. There's loopholes around like the FTDs and stuff like that, but it's an illegal practice. And then there's the whole like creating a synthetic short position with the with options. There's just a lot. When the squeeze happens, do the hedge funds need to cover all their short positions at the same time, or can they cover them partly? A bit like Tesla, what options do they have? Music Boy, lots of good questions tonight coming out from you. Thank you for all these good questions. This is a great one. So there's a couple of different variables in how the squeeze will play out and what rate these shorts will cover. Let's just go over a couple of these different variables. One, when they actually entered their short in terms of the share price. If they were at 5, if they entered their shorts at 5, their average like shares sold short was at $5, they're gonna have to cover their short position sooner. But the other variable is how big they are as an institution. And that means, well, how much money are they willing to just throw at this to kick the can down the road and maintain these margin requirements? So those are the two different variables that I see. And what their margin requirement actually is would be a different one. So there's technically 3. What the margin requirement is, when they enter their short, and how big they are as an institution, and how much liquidity that they have. So most likely, it's not just going to be like we hit a price and we squeeze. It's going to be we hit a price and this basket of shorts needs to start covering their position, because that's like how they're set up. They need to cover, let's just say it's 200. This group of shorts need to cover. But the shorts that would have to cover once it gets to 400 aren't really like freaking out that the stock's at 200. You see what I mean? But those shorts that covered at 200 could push it up to 400. Gonna load up on ADA. I think that can make me millions. Trap it on Wall Street. There you go, man. That's the good thing about the market. It's like if you think that an investment will go up, you can put your money where your mouth is and try to make some money. It's awesome. Let's see. Can you explain why AMC got downgraded? Because they're messing with the stock. They're just, it wasn't like a real downgrade. It wasn't like a JP Morgan downgrade or a Citi downgrade. I've never heard of that institution before in my life. I've heard of a decent amount of them. It's just more FUD. Just more FUD. Okay, I'm back. Who wants a drink? Says Pam. Guys, honestly, I've been like, I've like don't have the urge to like go out and party anymore. It's weird. Every once in a while, though, if it's like, oh, there's like a solid group, like a group of people going out, and it's gonna be a good time, I'll like let it rip. But like in general, it's like the whole like bunch of times a week type of thing. I just feel like I'm over it. I don't know why. It's very weird. What happened today? We just got knocked down. So now shorts don't need to report until October 2023. No, that's just bank swap dealers with weird. What about a good Diamond Hands IPA with your stream though? I'm not a beer guy. Seltzer. I like High Noons now. I've kind of gotten off the White Claws and just switched over to High Noons. I like those. Go out and see a movie at AMC. I'll do it. STV a grandpa and teenager body. Guys, I used to really let it rip. Yeah, I don't know. I don't know. There's just some other things that I want to do instead. There's some things that I didn't do over the last like 6 months that I want to be able to do. And me going out and being a drunk idiot, it's not going to help that. Bounce tomorrow, easily could. Truly lemonades, those are good. Started this weekend with Shang-Chi. Only blockbuster after blockbuster. Interesting. Do you think when big institutions sell, the price will drop dramatically? No. Here's the thing. Here's the thing about institutional selling. We know what they hold. Like we know, according to their 13Fs, a rough estimate of what they're holding at the current time. BlackRock, Vanguard, big apes, big whales in this. Renaissance has a solid size position too. But here's the thing. Retail owns a lot of shares and it's spread out. And retail is holding to those really crazy high levels. So when we think about this, if there are that many counterfeit shares out there, it takes the percentages of what those institutions own and cuts it down by a lot. Let's say the amount of shares that are actually out there are double what they're supposed to be. BlackRock owns 30 million shares. Their percentage of ownership gets cut in half. If it's 3 times as much, I believe it would be 1/4. No, 4 times as much would be 1/4. I don't know. I'm doing random math in my head. But think about that. If there's more shares out there than they're supposed to be, we know what the institutions own. Their percent ownership goes down. And when we think about who's providing the buying volume during the squeeze, it's the shorts. We've been over this before, that there's like that dynamic that switches. It's like right now, long institutions and retail are the buyers, and the sellers in both are the short hedge funds. So when the squeeze starts, that dynamic switches. So it's just like a giant bulk of shares over here. Let's do it this way. Let me see if I can pull it, like make this easier to see. So hold on, let me hit this super real quick. Ashraf, thank you so much for the super. I really appreciate it, man. Bad day, bad press, drama on Twitter. Yeah, I think I saw some of that. In a bit of a letdown, but it's one day. FTD's up, discount back in. All shorts are future premier buyers. Relax, 100%, man. So let's just think about this. So think about the dynamic between like longs and shorts. Shorts are shorting over here. Longs are holding over here. But let's just think about this as there's a giant basket of shares over here, and there's a smaller group of institutions over here. Now they have to, it doesn't really matter who owns it. It's like there could be like a large chunk of institutions on this side that like have a bunch of the shares, or it's just evenly spread out. Well, retail, it's all going to be evenly spread out. With the institutions, it's going to be slightly more concentrated, but the people over here just have to buy what's over there. You see what I'm saying? It's like, it doesn't matter. It's like, when you think about it very logically, it's like the people over here have to buy what's over there. It doesn't matter like how concentrated it is over on this side. They still have to go out and buy it. And that buying pressure is going to push the share price up if these sellers that are over on this side are willing to hold out. Now, again, the institutions could sell at lower levels, but the earlier that the institutions get out, the more like crazy it can get, because after the institutions are all out, it's all retail. And again, when we think about if it's spread out, it's going to be more like less selling volume that's coming from this side, and the buyers still need to buy all of those shares. Can you guys hear that rain right now? It's like pouring. My window's right here, and it's absolutely pouring. Don't watch or listen to any news on AMC unless I see margin call in the title. There you go. Nepal, have fun, man. What's dumping? It's dumping, bro. Like rain? AMC had a little bit of a sell-off, a little bit of a bounce now in the after hours. We're only down 10 cents to 0.23%. I don't want to hear about your weak rain. Okay, Aporcalypse, that's fair. That is a completely fair statement right there. Yeah, it's raining hard in CT right now. I hear diamonds falling outside. Yeah. Yeah, you won't really hear about like we'll speculate on when they're happening and like what's going on, but you'll never hear like a notice. Xavier, it's pouring. Yeah. Rain in Florida all day. That stinks. STV, when golf. I might. I'll be pushing. I'll come down I think I'll be down in Naples for like a couple days in the winter. We can link up when I come down. Rain in Westchester too. Yeah, that's like probably two hours from where I'm at right now. I'm like northeast Connecticut right now. That's cool. Go look at what they did to SPRT starting at 7 p.m. They covered after hours. Yeah, they covered some, I'm guessing. Like not all. We looked at this a little bit earlier. Let's see if it changed. Yeah, they covered a little bit, but then they knocked it right back down. So it's only up 3.44% in the after hours now. And at one point it was up like 10. I think the no-name analysis people were just trying to build credibility. Kalani, I'm not sure who you're talking about. Why you always ignore me? Corey, I don't. There's just a lot of messages that flow by. SPR T is like 85% shorted right now. Jeez, man. Trucking all day. Thank you so much for the super chat, man. In 2008, Volkswagen squeeze, Porsche owned over 43% in shares, 30% in options. That week, Volkswagen went from 100 to 1,000 a share. Trucking, I think it was a little bit longer than that. I think it was a little bit of a month time period. We can pull up the chart on the VW squeeze again, but it was bouncing around. Let me look. Yeah. See, this is, yeah, I don't have the months, but it did look like it played out for a little bit longer than that week. SCV looks like he only plays putt-putt golf. Hey, Mick Slipple, why don't you go check out that video on my Instagram and see how you like my swing? It's pretty buttery. We break in 48.30? When? Oh, I don't know, but hopefully soon. Yeah, we have a lot of good movies coming out. I saw the James Bond trailer. Shout out 007. I saw the James Bond trailer last night, and it looked pretty good. I'll probably try and go see it. Chad was the analyst that downgraded AMC. However, he has IMAX as a buy. Jeez. STV, don't ignore us. What's up, Abraham Lincoln? When are we going to go play around, STV? Guys, we can do a whole golf tour post-squeeze. I just can't, like, I have school, so I can only travel, like, I don't know, once like a month, once every other month. Thanks for pronouncing my name right. Anytime. Let's see. AMC now down 16 cents in the after hours. We got 1 minute left until after hours is going to close. But again, after hours moves don't really matter. Even pre-market, it matters a little bit more because we're about to go into the market hours, but it doesn't really mean all that much. STV, I can see you in a Travis Scott mosh pit. I've seen Travis Scott in concert once. I went to Gov Ball after my senior year of high school when he was performing. It was pretty good. Hey, TMI's avocado. Guys, I'm not ignoring you. There's just a lot of chats. SVD, do hello work, listen to your followers. Why is FCUV rocking. Huh, I'm not sure. FCUV. Focus Universal. What do these people do? I mean, don't chase, but yeah, we got nothing on Ortex for them. So I don't know. That could be like a merger, acquisition, something like that. Darren, thank you so much for the super. How is it going to squeeze if there's only 20% short interest? That's a good question. 20% short interest is very high. When we think about what happened to Volkswagen, it went to over $1,000 a share, and its short interest at the current time was only 12.5. With AMC, there's a lot of speculation that there's a lot of shares out there that shouldn't be, and those aren't like incorporated into that 16 to 20% short interest. It doesn't show up there because they're not reported. So it's most likely a lot higher than what it is right now. We saw GameStop at over 140%, but GameStop's has like very significantly come down. It is entirely possible that they're hiding the short interest in the option chain with swaps and a lot of other different things that they've been doing. But most likely, even if it was only 20% short interest, that's still very high and could cause a decent squeeze. Vic's Govball, that's the one where it rained and he came back on stage at the end. Actually, what happened was he was on stage and all of a sudden he just yells like, "Let it rain" or something. And then it just started pouring. And that was really cool. Yeah, that after that Travis Scott concert, we walked like, because it's on an island, and one side of the island goes on like to Manhattan and the other side goes like not to Manhattan. I don't know what the other side would be, but we were walking and it like we went to the wrong side and you have to walk like another like 2 miles to get off the other side. That was tough. John Curtis, thank you so much for the super. How long can these short hedge funds hold out? Years. If the price stays where it is at the current time, they could hold on for a decent amount. But if we keep doing this cycle where we rip up, make a higher low, come down a little bit, rip up, make a higher low, it's only a matter of time before they're not going to be able to maintain a lot of these margin requirements, and then they're screwed. What about the over 1,000% increase in FTDs? John, good question. Can somebody actually send me the FTD numbers? Because we've seen really, really, really high FTDs before, and the price action for AMC doesn't really suggest that we would have had a really high volume of FTDs in the beginning of August. So if anybody has like the actual numbers and like a chart, send it to me. I've seen that article and I don't think they're really correct in that, but we can look at that. Do we still own 80+% of the float, and how can we confirm this? Well, 80% I believe was institutions and retail. It was both. Or the 4.1 million was both. So the way that we look at those numbers, I think, is wrong sometimes. But I'm tired, man. I went to school today. Honestly, tomorrow's going to be even worse. Guys, tomorrow I have a 3-hour lab from 11 to 1. And then at 2 o'clock, I have another class. So I have to like get from campus back to my apartment, record a video, then get back to campus. That's going to be a hustle. FCV got uplisted to the NASDAQ today. Yeah, that's going to do it. That will definitely do it. Hit that like button, slackers. Yeah, thank you, TMI's box. When do you do your homework? I don't know, man. I'll probably have to do it after this. I have to read some stuff for my management class, and then I'm going to do this this accounting thing, I think, because tomorrow I'm not going to be able to. So after we cut the stream tonight, that's when I'll do my homework. Oh, what's up, Antics? Yeah, this whole homework thing sucks. I'm finance. The funny thing is, though, is that I'm a finance major and I'm only taking one finance class. I'm taking bio, managerial accounting, like global finance. And there's one more. What's the other class? I have another class. I don't know what it is. Bio, managerial, finance, management. No, yeah, management. There's a management class. What school? I go to UConn. We had light volume today. We need high volume to have a green day. That's not necessarily true, Gary. When you think about volume, a lot of people get this mixed up. Here's the thing. If more people are willing to buy at higher prices and they're willing to step up to the ask and basically wipe out those sell orders up there, then the price will go up. It doesn't necessarily have to be high volume. SCV, when you getting together with Trey and TMI? I'm flying out Friday. Oh, PDP, thank you so much for the super chat, man. Have a coffee on me. Whew, thank you, man. I will. I've been what do you call it? I've been drinking a lot of coffee recently. What kind of labs do you have in finance? That's for my bio class. You manage my stocks. I will do your homework, says Mads Duck Suspenders. See, that would be great, but like what happens when I have to take an exam? Then I'm screwed. The homework's not bad. It's just easy stuff. I actually have to learn though. SV, that's a lot of courses. I took 21 units at a time, and oh my God, Pam, I'm taking like 13 credits this semester or something. It's not a lot. I think I have to take more next semester, or 13 or 14. I'm not sure. The minimum is like 12 to be a full-time student. 18 is like the max. Trucking all day. Thank you so much for the super. Where can we go to find when Adam Aaron or executives file a 10b5-1 to sell shares? If the insiders are planning to sell, maybe MOS is close. The 10b5-1. I'm getting them mixed up in my head. There's that plan, and then I think there's another one. Maybe they're both the same 10b5-1, but it's just a scheduling of when they're going to sell. Adam Aaron said it was going to happen towards the end of September is when he's going to start doing it. But again, we've been prepared for that stupid FUD to get spread around that Adam Aaron is selling AMC. Yeah, shut up, institutions. The news media, stop being stupid. We know this is going to happen. We have already had it asked and answered by Adam Aaron before. But if you want to see when they're selling and in what amount, sec.gov or hold on. Not sec.gov. It's SEC report. Yeah, sec.report. And we can see right here, they have the last one was on, wait, that's weird. Oh, the last one was on August 18th. And we can take a look at what one of these looks like. So it just says this right here. This SEC Form 4, lists the name, address, Leewood. Hey, I was there a couple of weeks ago. The amount, it says securities acquired A, disposed of D. They marked it as D, so this is the amount of shares that he sold, the price, the amount of securities owned in total. And then down here, it'll say like explanation of responses. The sales reported on this Form 4 were effected pursuant to Rule 10b5-1 trading plan adopted by the reporting person more than 30 days prior to the transaction. So they had already scheduled that sale. So that's how you would look at those. Tell your professors that you do this and ask them to give you extra credit. They just might. Gary, one of my professors, here's the most wild thing that I heard. This professor, I walked into class, he started talking, and I was like, this dude, awesome. Really awesome professor. Like, I was like, this is going to be such an awesome class. And it's also the one class, like tomorrow, that I'm going to have to be late to sometimes. So he was saying some things about like he used to work in like finance somewhere. It was like it seemed like a really successful guy, and then just wanted to teach. He was talking like a little bit about entrepreneurship too. I was like, oh, I do that. And then I like went up to him after class. I was like, hey, like I have a little bit like of a circumstance here that like I work. I have this like YouTube channel, and I showed him what it was, and I was like, the time that I would like record on Thursdays, I have like this 3-hour lab. And then I only have like an hour in between before I have to get to this class. And I need like I might be late to Thursdays sometimes. Maybe a lot, maybe not. I don't know yet. And he was kind of like, oh, cool. If you're going to be late, just let me know. But I can't guarantee that it's not going to impact your grade. So I was like, oh, man. Because I just won't deal with it. Like if I'm going to deal with like if I like Because honestly, when you think about it, I don't need to go to the class. I'll just read the book, figure out the notes from somebody, take the test, do all the assignments, and get an A in the class. That's like what I've done for a very long time. I figured out that I actually don't need to go to a lot of these classes. I'll just do the work, prepare for the exam, and do the assignments, and then you get an A. The whole attendance thing, it's like, really? Like, especially if I'm like doing something. That's what freaked me out. That's what like makes me annoying. Makes me annoyed. Why are you taking buyout? Because I have to. Vix, a very fundamental question. Do hedge funds pay interest for naked shorts? They do. They do not. Synthetic shorts? No. If not, why do they need to cover them? Because they're on their balance sheet, and it will play into like their margin requirements. Is AMC squeezing or just a theory? No. Eventually, these shorts right here, this 16%, these little less than 100 million shares on loan, they will have to be bought back. And 16.87% is enough for a squeeze. Max, what's up, man? Do I even lift? No, dude. I don't have time right now. I have to get on a good schedule though. I've been trying to figure out some things with you know who, with a little bit of a schedule so I can Chris, you're good. I know Max. We're chilling. And then I'm probably gonna have to go to the gyms in the morning. So if you want to go, just let me know. Hey guys, guess what? Max lives like right there. Let's see. Hey man, do you think in your non-financial advice we could see a retest of 48 tomorrow or Friday? Yeah. But at the same time, we could also go down to 42.50. We like have no idea. Is it possible for them to bring the shortages down without actually covering? Yeah. Yeah, they easily can, but it's here's the thing. They're just gonna spoof it. The shorts are still there. It's just not gonna be like reported on Ortex. Like here's like a really good example of this. GameStop. It says it only has a 12.44% short interest. Okay. And utilization only 35.53%. Cool. Okay. Well, we had that price run up in January and everybody was like, that was the squeeze. But then the DTCC chairman comes out in the SEC hearings, or in the congressional hearings, and is like, yeah, they didn't cover their shorts. But it looks like they did. It looks like the estimated short interest went from 71 million down to like 10 million. So what did they do? They just like they did something. They hit it in the option chain. They repackaged it in swaps, did something with them, but it's still there. Like that's the thing. It's like it may not show up on these reports, but it's still there. Like it's still on their balance sheet. Like it is on somebody somewhere's balance sheet, these short positions. Antics, what are you going on about now? Can the squeeze happen tomorrow? I mean, it could, but it's probably not going to. Or we need more factors so it can actually squeeze. Lewis, we need a little bit of a perfect storm. We're going to see what happens with this next run up that could be happening over the next like 1 to 2, 3 weeks. And when we see this next run up, more shorts are going to cover. And if we get to like 150, 200, 250, that could be those levels where these institutions just can't take it anymore. They can't handle it. They can't maintain these maintenance margin requirements. They're just like, they're going to have to sell off other positions. So they're just going to take the loss there and just cover the short, be done with it. And then that could set off everything. What ended up being the deal with the CFTC thing? I'm pretty sure it only applies to banks. It might only apply to banks. And again, one like proposed rule change or one announcement is not going to make or break anything, in my opinion. Oh man. freaking tired tonight. Is your name really VIX? Of course not. Longer it is, it will not be to the moon, but AMC to Pluto. AMC to freaking Andromeda. Like at this point, like AMC and GME, they're gonna like eventually it's just gonna get to the point where they just have to let it go. On September 3rd, when exactly do the new margin requirements take effect? Open, close? It's 10 a.m. Eastern. If they are under that $250,000 minimum, and that's just the minimum. If your situation or your account or your firm like meets the standards to only have the minimum required fund deposit, and you're below that by 10 a.m. on Friday, then you have to put up that collateral by 10 a.m. How long will it take? It'll probably be a week or two, is what I'm guessing. I heard Bank of America is under because they use swaps to short AMC and GME. That's just what I heard. Antics. It's very possible. They have a pretty sizable derivative exposure right now, and swaps would fall under that. Let me see if I can find this. Okay, it's gonna be hard to see, and I can't zoom in on this, but I'll be able to see it. So what we have here is the top 4 commercial banking institutions and their derivative exposure as of March 31st, 2021. JP Morgan, 52 trillion, Goldman Sachs, 50 trillion, Citibank, 46 trillion, Bank of America, 18 trillion. So the top 4 commercial banking institutions account for 168 trillion of all the derivative exposure, but all of the banking institutions is 188 trillion. So it's heavily concentrated in those 4 institutions. So they all have issues. If these derivatives go against them and they're all OTC with phase 5 UMR, Margot, make sure you're watching it live. Let's see. Looking at the FUD on Chad from Macquarie. Yeah, Hayden, they're great. They're just idiotic. Eric, in your opinion, do you think there's a possibility that these smaller hedge funds will potentially be selling off their positions, aka covering their shorts at 10 a.m.? No. I don't think Friday is going to be a day. Remember, guys, no dates. Like we can't hype up dates. Like I think September 1st got hyped up a little bit too much because people didn't really understand what they were looking at. Like phase 5 UMR, really big. But is it going to kick into effect and basically blow everything up in a day? No, because if it did, they wouldn't let it come out. Like, let's just say there was a rule coming out that said you have to have like a 75% maintenance margin on any short position. And that was going to come out on one day. They would never let that happen because they know what would happen. They would have to sell off all their other assets to, one, maintain these margin requirements, or they would just cover their shorts. We would squeeze all over the place and people would be making a bunch of money, but a lot of institutions would be losing a lot of money too. So they would never make a rule like that. The rules that they're going to put out, they're basically going to be like, okay, we want to take steps in the right direction to make this situation better, but we can't have it just be like rule comes into effect, everything explodes. So it has to be this gradual situation of like, let's lead it into what's going to happen. And then eventually it's like, oh, well, whoops, now you have to cover all your shorts. Why was today's pre-market so hyped? I mean, we had 3 green days in a row and people were excited for another one. At one point, I believe we were up over 1% in the pre-market, which, I mean, let's look. Like at one point we got to 48.60 in the pre-market. Like that's big. That crossed 48.50 mark. We couldn't hold above it. And then we got here, 48.22. We got really knocked down. We started to come back up a little bit more. By market open, we were at 47.70, a little bit of turbulence, and then we just got shot down for the rest of the day. Dude, you're underestimating that they have the ability to drop their long positions on blue chips and SPY to use that liquidity to continue averaging down. No, I'm not. They easily could do that. But think about this. If a lot of these institutions start doing that, there are going to be institutions that aren't even like have any involvement with AMC and GameStop because those types of sales, just think about supply and demand. If there's a lot of selling volume in the blue chips, it's going to go down. Everybody's over leveraged at the current time. It doesn't necessarily have to be on AMC and GameStop, and that just increases the margin calls. So then those people sell their positions. And then it creates this domino effect of, oh no, everything's starting to come down. And that's why people think that this AMC and GameStop situation, if there's going to be all of those fire sales, could potentially crash the market just in terms of the dollar amount that they're going to have to take care of. Can I ask why all these large banks are involved in shorting? I would think it would only be hedge funds that are shorting. Well, the large institutions have like advisory sectors, and they do trade. They have their own positions. Do you think we'll have a nice Christmas this year? Okay, so here's a little tinfoil theory. Let's do a little bit of tinfoil. Put my tinfoil hat on. GameStop's earnings coming up. It would be a very good time for them to announce the ex-dividend date for their special dividend. An ex-dividend date is, hey, you have to own shares before this date in order to qualify for that dividend payment. When that happens, it could spark a little bit of covering, like a little bit of squeezing right then and there. So then GameStop, AMC, everything would start to run up, but the actual date that the dividend could come out would probably be around the end of the year. So it might be around Christmas time that the dividend would come out. Everybody would get their little crypto payment or NFT. Shorts would have to pay it. They would cover their position and start the squeeze. That is my little tinfoil hat theory. Which one will squeeze higher, AMC or GME? I mean, in terms of price, most likely GameStop, just because they have less shares out there. Debt. You really like boss bonds. I like boss bonds too. Citibank has over 500 million synthetic shares. AMC wrapped in their custodial accounts for BDRs. They could. I saw the BDR thing as something completely different, but I'll go watch this video to see what I think about it too. Do you think they are already covering other less shorted stocks in preparation on AMC and GME MOAS? It's very possible. Very, very, very possible that that's happening. What do you think about the infinity pool theory? Is the infinity pool theory that the share price of GameStop will just continuously go up forever just because of the vast amount of shorts? Like it literally could go to infinity. I think it's a good theory. I just think that there's other things at play here that would maybe potentially hurt that from happening. Because we don't know. We've never seen. The thing is, like, we've never seen anything like this before. There's been nothing in the past that's like to this magnitude that's happened ever. This is like a one-time thing that I don't think is ever going to be able to happen again, mainly because of the regulations. And if these institutions take massive losses on this and they don't get bailed out, which honestly they probably will, just looking at what happened back in 2008, then this probably can't happen again. But here's the thing. If we ever catch wind of something like this happening again and people can put out the research being like, hey, there's a potential for another one of these, what do you think is going to happen? Everybody's going to be like, oh, part two. Like, oh, they're messing with the market again. Like, oh, like it could squeeze again. And then people are going to catch wind of it. They're going to be like, oh, this is another squeeze that like they're messing with this stock, trying to put it out of business. And if I buy shares of it, one, it saves a company from going bankrupt from manipulative practices in the market. And two, you can make a bunch of money on it. I think people would just hop in on another one. And it's all about just the spread of information. Like, it's not financial advice. It's just like, oh, this is the situation going on with, like, at the current time, AMC and GameStop. And down the road, it's possible that something like this happens again because they're always going to try to exploit these loopholes. Because these institutions own such massive amounts, can the MOAS end up depending on them? No. Citibank has only 61,000 AMC shares in their filings, but they're supposed to have north of 500 million to account for over 3 billion of AMC BDRs. just because they underwrote it doesn't mean that it's like real shares. That I'll watch that video and I'll let you know what I think. But think about what that is. It's just it's not real shares. Like it's not synthetics. It's just like a different. It's like how a stock trades on a different exchange. I'll watch the video. I'll get back to you on it. But let's relax for that. With that for now. Blockbuster closed too soon. They might have gotten saved in 2021. Yeah. Yeah, I got you. I'll take a look at it. I mean, it's interesting. Like I'm always like, it's just information. Like if I think something's happening and it ends up not being the case, then I want to know what the actual information is so I can tell you guys and make sure everybody else is fully aware of what's going on. Do you think they are hoping the market crashes so they can get bailed out to cover their losses? No, because they have a bunch of long positions too, and they're over leveraged. Like a 10% drop in the market is going to feel freaking huge with the leverage levels right now. Any thoughts on the 40s for October 21st? In the money calls with a little bit of time, very safe. You're trying to mimic owning 100 shares, so it's giving you a little bit of leverage on your position. If you are fine taking that risk, go for it. In the money options are technically safer. This isn't financial advice. I'm just going over the concept of in the money options. But yeah, options in general, very risky. If you haven't traded options before, probably not a great time to start messing around with it on AMC, but do what you want. Let's see. After these two, there will be crazy stuff trying to get traction. Look at the searches on high short companies. Yeah, no, it's not going to be the same though. Let's see. Oh, you know what I don't want to do after this? Freaking homework. Ugh. I'm working all day to like uncover and present information about the stock market, and now I have to go learn stuff that doesn't apply to anything most of the time. It's fine. Gotta do it. Can you explain scalping? Yeah, it's just short-term in and out trades, making a little bit of money each trade. Low risk, low reward, but if you can do enough volume of it, you can make a decent amount of money. What am I studying? Finance. I have to do accounting homework and I have to read something for management, I believe. But I feel like I'm decent at reading at this point. You know why? Because we get DTCC filings out every time, and we have to figure out what they mean. You know how many illegal? Okay, that's not true. I have helped out with legal cases in the past. I have read real legal filings, and like just been people have been like, "Hey, what do you think of this?" And they've been like security stuff, which is fun. But Vix is pissed off about homework. Yeah, guys, I am pissed about homework. We appreciate you, STV. Thank you, guys. Thank you. I appreciate all of you guys. Without you guys, I wouldn't be able to do this. Do your accounting homework first. Nah, I'm not going to do that. Actually, I might do that. And then I can just mess around and read. But the accounting homework is literally just like, I think it's like you have to get 30 questions right on this like multiple choice thing. But like if you get them wrong, they just keep giving you new questions until you get 30 questions right. But I've heard it's like a harder class. So I got to like learn it. Do scalpers use options? Yeah, they can. You can, if you're trading, if you're using technicals to find your entries and exits to try to predict where the price is going to go, options can amplify those returns, but it can also amplify your losses. SV, you should start putting together a curriculum on real world investments. UConn might adopt it. Honestly, if we have an investments class, but this is what it teaches you. It teaches you like portfolio analysis. So it's like how to create like an efficient portfolio in terms of like I forget what it is. Guys, honestly, I don't even know. You know what my portfolio is right now? It's freaking AMC and GameStop, and it's doing pretty good so far. You're the smart kid in the back row. Now I really know you. Oh, I'm always back row. Yeah. Valuation methods, portfolio management. Yeah. That's like, but like not really. Like the two classes that have like actually been applicable to this is like basic econ, but like literally it's just supply and demand. And then fixed income for bonds, because in my class we read some filings like for the bond stuff that was coming out about AMC, like, and for the broad market stuff that we look at all the time with like, I mean, treasuries and stuff I learned like outside of class, but like seniority of corporate bonds, like yield spreads, like how everything works, like that's a decent class to like figure out stuff. A good portfolio. Oh, it's pretty good. Landy Brawl Stars. We had a verified user in the chat. What's up, man? How you doing? What do you think tomorrow will go up more or down? I think with the sell-off today, I think a lot of people or institutions could step in and buy this dip. But again, I think after the decent run that we had, I think we can see a little bit more red. But again, nothing's changed. It's just a waiting game. Like this is kind of where we're at. Like after June, we got like, I think we were all at the point where it's like everybody needs to relax. It's just a waiting game for the next time this happens. Like we're going to see volatility. We're going to see like big swings up every now and then. We're going to see big drops. But at the end of the day, it's like, okay, well, we're waiting for this trend reversal and confirmation that we're headed on an uptrend, which I believe we've seen right now. And then we just wait until that happens, which we're kind of here. So now it's waiting until we really get going. So that's why there's a lot of excitement. Yeah, let's see. Guys, I told you this with the arm wrestling thing, I never lost. Vix has the reach. Yeah, guys, I'm a freaking bird. Look at this thing. I have a giant wingspan. There's mod drama. Ooh, Geo. I don't know, man. I've got a lot of training behind me. I don't know. All right. Back to AMC. Just curious of his thoughts. He won't respond. What didn't AMC run up to 48 tomorrow? It could. Like it's these price targets on like, what is it going to do tomorrow? Nobody knows. You can look at the technicals to get a good understanding of like what we could potentially do, but at the end of the day, this is like one of the most difficult multivariable problems that we have. It's like, okay, well, if all of these variables are lined up, the one that's like way over there could freak out and cause all of the good stuff that would cause us to go up to be irrelevant, and then we have a red day. There's just so many different moving parts. Why does your voice sound higher pitched on your updates compared to your live stream? I don't know, man. It's just my YouTube voice. It's just a weird thing, but I can also do this. What's up, guys? Welcome back to Rich Capital. That one I don't think was very good. TMI will not be on tonight. I started going into virtual meetings saying, hey, what's going on, guys? It's AJ. Now everyone does the same thing. That's funny. It's his phone voice. Yeah. Hey, man, how excited are you for the rest of the week? I mean, I'm just like, I'm ready for the next big move. I'm like ready for it. I'm like mentally prepared for what we have coming up. And if it happens this week, awesome. If it doesn't happen this week and we stay flat or go a little bit of red to the end of the next week, who cares? I don't care. Like, yeah, I'll eat a little bit of like unrealized losses on options, but then we could run the next week, or we could run the next week. It's like, it doesn't matter. It's like, okay, well, each day is another opportunity for us to have a big run up. And each day gets us, each day that it doesn't happen gets us closer to the next time that we're going to have that big run up. When AMC is at 1,000, could it fall back down to 500? Absolutely, and I think that's going to happen. Can you talk about taking profits on options, how it works? Think about buying contracts, expiration in 23. There's a lot of different ways to do it. There's some complicated ways and there's some simple ways. Here are the simple ways. You buy an this is literally just strategy. If you have an even amount of contracts and the value of the contracts go up 100%, you sell half, you've made the play free. So you've gotten back your initial investment and you are now playing with house money. Your potential gain is going to be cut in half, but it's a free play and you've basically taken out the money that you put in. That is the easiest way to do it. With longer dated options, you're going to need a bigger move to go up 100%. With shorter dated options, you could have like a 3 or 4% move and your options bump because you get a nice little kiss from Vega, implied volatility. And then your contracts rip. But it all depends. And for a moment, I thought we were actually going to squeeze. Was starting to think about my real estate and crypto mining plans again. Shimu. I mean, we're going to eventually, in my opinion. Like, I think we're going to just end up ripping. Hit that like, peeps. Yeah, if you guys haven't already, just drop a like on the video. It just helps us get this info out to some more people. So thank you guys. Yeah, I'm still waking up excited. It seems more than usual. AMC was yeah, those decimals, it could be. I never saw that. I've never seen that on AMC. It costs you nothing to do it. Yeah, it doesn't. It doesn't cost you anything to hit the like button, guys. Shaking out paper hands today? It could be. Usually too lazy to hit the like, but I did it this time. Angel, thank you, man. SV, I bought a $60 call for 9/17 expiration, currently down 25%. Is there enough time for this call to get profitable? Yeah, if we see another big green day, your contract is most likely going to go red to pretty big green because all of the contracts will just start to spike. But if we continue to go down and then we spike back up, you might get back to break even. It just really depends on when we have that run up. The closer you get to expiration and the further away your contract is from being in the money, the more theta is just going to get you. Like time decay is just going to eat away at your contract until it's worthless. I saw you tuned in to Houston Wade when he was talking about prices. Any thoughts on what he was saying? I think he was talking about strategy. And everybody has their own strategy. I liked his strategy of what he wants to do. It seems pretty cool. I think it was like pick a price and then his strategy was like pick a price to start at, and then sell one share and then have a limit for like 50% above that and then sell another one and then 50% above that. And then you just keep going and going and going and going until it gets to like the top. It's a very interesting strategy to use. It's a little bit more risky in my opinion. But again, to each his own. Everybody has their own strategy, and if they want to diamond hand this thing to the absolute top, there are some strategies out there that you can figure out how to comfortably do that. Theta is the boogeyman. If time decay comes and gets you, let's see. About what, dude? Hold AMC. What are you talking about? SCB, seeing a lot of concern circulating about the CFTC thing. Have you covered it in this session or just in the video I watched a few minutes ago? Yeah, I covered it in that video, the stream last night, and we went over it a little bit in the stream tonight as well. One thing's not going to make or break anything. I believe I saw a comment that said it only applies to the banks, which makes sense because it's bank swap dealers. And again, it also said that it's not going to impact their ability to see the position sizes. And if they are still able to see the position sizes, the phase 5 UMR still applies. So we'll see what happens with that. IV scares me more. IV crush, yeah, but if you can get in on a low IV environment and then IV just skyrockets, IV's your friend. That's why the earnings run up is so great, because if you can get into contracts before the implied volatility like starts to run up, you'll just make money regardless, because the market's pricing in a higher move for that date, so the contracts will become more expensive. Is 48 the new 1450? It looks like it. Vix hates Theta, and I bet you in real life he has a nemesis. I don't hate anybody. I dislike some people. There are some people that I dislike. I don't hate anybody, though. You know why? I just don't care. I literally just don't care enough to be like, oh, I hate you. It's just too much energy for me to just be like, I don't like you. It's just like less energy to just be like, I don't care. SCV, I think we know what happens to Kenny at the end of South Park episodes. I haven't seen, I don't watch South Park, so I wouldn't know. Whose voice is deeper, Wrench or Pop Smoke? Wrench. What's up, guys? Welcome back to Wrench Capital. I simply asked if you got paid to bully people. Who do I bully, Truth Team? I don't think I bully anybody. I usually rant on shills, and I also, the only people that I bully is CNBC usually. Oh, not you specifically. It was a non-directed question. I mean, I have no idea. STV rather wants to talk to us than do his homework. Yeah. I bet you can sound like Bernie Sanders. I haven't listened to enough of them. You've been practicing Wrench? Nah. Almost starting to think Vix is Wrench? Nah. Nah. I can only do the first part. And other than that, his technical analysis is way better than anything I could do right now. So can you bully Jim Cramer? I don't think I ever have. I don't know. I just think he's just kind of there. 007 is a bully. Oh, what's up, Fuzzy? Ooh, Fuzzy. I don't think I ever took a look. Oh, I forgot to look at the stream of the 3D printer. I'm sorry, man. If you have a picture of it, I'd love to see it. I'm not gonna try a Pop Smoke impression. We're not doing that. I really want to now, but like I shouldn't. It's just gonna be awful. FTDs over 1,000% increase. See, I don't. Okay, we're gonna look at this right now. I don't even think the source is correct. Okay, tremendous blog. It's a blog. Major new data. Oh God, just came out today from the SEC. It shows failures to deliver. Isn't that 750,000? Wait, hold on. It's not 1,000%. Hold on. No. What the hell is this? Is that 10 million? No, that's a million. We've seen way more than 10 million in FTDs before. It might have spiked, but it's not like FTDs went like very low. Like they really came down. Like FTDs went from like pretty high and they came down, and now they're coming back up a little bit. But if they significantly come down and then they jump back up to the levels that they were at, well, it might be 1,000% increase, but it's still not as high as it was. Forbes reported on it too. Like Jeff Forbes or like Forbes? News. Let's look. Tokenist. I don't see anything. Who is going to buy our shares at astronomical prices? The shorts, because they are forced to. They came down because they hid them all to get off the threshold list. They did. Looked like they did. I asked you if mods get paid to bully people. No, the mods just try to keep the chat good. The mods don't mess with the mods. I'm so confused. Is this comment even relevant to what we have going on that you guys want me to see? I'm just confused. Is this like some breaking DD that I have to go over? Or is it just some like random comment that the mods just keep deleting? Last known stock that had margin call. Stocks don't get margin called. Institutions get margin called because of their positions on a stock. Let's see. I mean, the last known example of like a giant margin call or a forced liquidation that caused like havoc are Kegos when they got liquidated out of their Viacom and Discovery positions, and those stocks fell like 60, 70%. That was aggressive. Don't take this the wrong way, but it was actually really nice to not be able to pull in YouTube on the cruise. 8 days of no stock videos was good for my brain. Ready to dive back in again now. CT. Honestly, dude, I'm like with you on that. It's not like, don't get me wrong. This is great. I love doing this. But at the same time, like I made a bunch of mistakes in like my personal life of like focusing on this stuff too much. And then I like really messed some things up that like I really wish I didn't mess up. It stinks, but I'm working on it now. And it's more of like you guys don't have to be on the internet all the time. Like you just don't. Like if you want to learn more about the DD, the developing stuff that we have going on, awesome. Be on Twitter, be on Reddit, be on YouTube. But if you're just like, I'm going to buy and hold, don't stress yourselves out. Don't get too hyper focused on what we have going on here, because again, at the end of the day, it's just a waiting game. Avatar, what's up, man? Good evening, Vix. I'm confused by that every synthetic share has to be bought back and that shareholders determine the price. Okay, so the synthetic or counterfeit shares, in that, hold on, what are you guys talking about? No, I'm not telling you this personal story. Well, hold on. I was Avatar's question. Okay, so for the counterfeit shares, it's still on somebody's balance sheet. So when they get like liquidated or they need to cover their position, it doesn't matter if it's a synthetic, a counterfeit, or a real share. They would still have to buy it back to close their position. Now, the thing about the we set the price is that for a supply and demand situation, when you think about like transactions, if the sellers are not willing to sell, so the supply right there, sellers are supply. We hold what somebody else wants. If we do not want to give it over and hand it over and give it up, then if there's such a high demand for that good, which in this case is AMC shares, they'll keep trying to entice you with higher prices in order to get you to let go of your shares. So that's where the we set the price comes in. It's like, oh, if we don't like, if the AMC community or AMC shareholders or GameStop shareholders or any one of these other short squeeze shareholders decide that they don't think that the price that the stock is currently at is worth giving up their shares for, but the buyers need to buy the shares back, then they will just bid it up to higher levels to where the sellers will then want to sell their position. Someone got it right. All right, I'm out of hedgy tiers for the night. I'm gonna have to refill. Yeah, anytime, Avatar. Thanks for popping in, man. Bam. Questions were answered. Oh God. Oh God. You guys are wild. What are your plans after MOAS real estate? Yeah, a lot of real estate. I'm gonna see what the real estate market's looking like. I'll go really slow. If the real estate market is where it is right now when the MOAS happens, and then I now just have like a giant bankroll of money to deploy, I'm gonna go really, really, really slow. Like the properties that I'm gonna buy will be like $100,000 properties. It'll just be like slow, steady, 25% down. Just get the cash flow, and just do like one every like, I don't know, 3 to 6 months, and just slowly start to stack them up until we see signs of like a decent real estate market. Like I think, here are my thoughts on the real estate market. I think that eventually home prices are going to get so high where people can't afford them, and the rental market's going to be awesome. So then when home prices come down, it doesn't necessarily matter all that much because you're still getting your mortgage payment covered in the cash flow from the rent payments, but you're not getting as much of the appreciation, but you get a lot of tax benefits for it. So that's what I'm thinking right now. It's really about rates. Fuzzy, thank you so much for the super chat. Pics sent to your Twitter DM. You can show if you want to. Fuzzy, I will. Let's take a look. Oh, this is perfect. I love this last one. All right. This is what we got right here from Fuzzy. So Fuzzy made this like 3D printed structure. So it's like a little cup right here. It says Hedgy Tears on it. There's liquid IV in it, a little cap that goes on it, a bowl, and then my name and the liquid IV thing right here. Fuzzy, that is awesome, man. Thank you so much. That is super cool. Everyone keeps saying housing market will decline a bit in the near future, so I told myself I will wait a little bit longer. Yeah, the thing that I have going on in my head is like, if you wait, the market could keep going up. In the correction that you would see, you would still be in the green if you just bought right now. Or it could be some crazy 2008 situation where home prices just fall through the floor and you get screwed. I don't know what it's going to be. I need to like start talking to a bunch of people that are like heavily invested in real estate to be like, tell me what the deal is. Just be like, what's going on here? Because I don't know the real estate market as well as like the stock market. Like, again, the stock market looks like it has something crazy happening and coming in the near future. Do I think the thing is, though, is that the variable is going to be the Fed. Is the Fed going to let everything go? No, they're not. But if the Fed lets things go right now, it probably won't be as bad. But if things get to the point where not even the Fed can prop it up, that's when something really bad happens, because the Fed is like the backstop. They're like, oh, we'll just print more money, buy assets, keep everything propped up, make sure nothing goes crazy and crashes. But if that doesn't even work anymore and we're in this stagflation period, then they're going to be like, they can't really do anything. And then things get really bad. I was around for Vix's first live stream, but been a subscriber since February. Havana, you've been around for a while then. Yeah, Nicholas, I agree. Oh, what's up, Amari? Vix, can you look at BBIG's short interest? Of course I can. Of course I can. 42.94. Utilization, 98.66. Percentage of the free float on loan, 52%. That is ridiculous. Cost to borrow. How is the cost to borrow minimum 0.33%, but the maximum 324%? That's drunk. Let's see. Banks have stopped lending. No, banks have not stopped lending. Did SPRT short interest go up again? I believe it did. I haven't been tracking SPRT. Ben, if you're still in here, SPRT short interest went up, right? I'm pretty sure it did. I mean, in the after hours, we saw that little spike on SPRT. My coworker has been trying to buy a house for almost 2 years now. Just got into contract this week. There you go. Also, at the same time, if I wanted to buy a house right now, I couldn't. Like, they would look at I don't have like proof of income. They'd be like, no, dude, you're not getting a loan. And I'd be like, fair play. I wouldn't loan to me either. Have you looked into Astro's theory, and what is your take on it? I like Astro's theory. I think it holds a lot of weight. It looked really good at the end of last week and the beginning of this week when we started to see that run up. But when we think about what happens in our market is that you can't always look at what's happened in the past, and it's going to be an exact mirror image of what's going to happen now. I think the theory holds a lot of weight, but there's going to be some nuances to it and tweaks that are going to happen with each run up that we're not going to see. Like when we look at AMC's daily chart, this got messed up big time. This is not what I want. Year to date. Okay, so look, when we see this one, this run up in January looks a lot different in terms of the day. So this was like 6%. What is this? 30%, down 3%, up 0.34, up 17, and then big rips. This January run up looks vastly different than this June run up. It was green, 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 red, green. Like, it's just different. So then what we're seeing now is something a little bit different as well. It's like, okay, little spike, come down, 3 green days, red candle. I think you can look at the broad picture of like where we've been at and say, yeah, we're pretty close to another big run up, but I don't think it's going to be an exact copy of what's happened before. But I do really like the theory, and I want him to be right because I literally have a monetary interest in his theory being right and us running up. Bam's theory, a lot of everybody else's theories about we're about to run up. I want them all to be right. Why wouldn't I want them to be right? If we go up, I make more money. Watch Simulate and Trades video this morning on housing. It's disgusting. Oh, Bliss. I definitely need to do that. He is a smart dude. The theory isn't supposed to be exact. It's an understanding that the pattern of is very similar. You can see where it's at. Astro never said it's exact. Yeah, I know. No. I know he didn't say it's exact. It's just like I think a lot of people are like, oh, we should have ripped today, or we should have had some sort of day today. And it's like, no, that's not necessarily going to happen. We don't even know if the time frame is going to be like everybody's saying like the cycle started, I think it was earlier this time. It's happening quicker. So the cycle's speeding up. So they might be losing control of it. It could get pushed. Like, we don't know. Like, the thing is that we just don't know right now. After we see a big run up to the next new all-time high, then we're going to know. We're going to have a really good understanding of what's going on. And how this really works and starts to play out. Interest rates are at all-time lows, which will save you more than the price difference. Yeah, true. But then the interest rates go up, home values go down. But you're going to be borrowing at lower. Yeah, but you can also write off the interest. Like, there's a lot of things that you can do. They aren't losing control of something they're manually manipulating. Hunter, if that were the case, we would have never ran to 77. If they were able to manipulate this like as much as everybody thinks they can, we would have never run from 10 to 77. Wouldn't have happened. They aren't using ARs or algos to trade this. Yes, they are. You can't have this like high frequency manipulation of a stock without algorithms. You can't have like five people sitting in like a room that with like a bankroll to be like, okay, this is what we're going to do with our trades. Not going to happen, because there's other computers out there in the market that are going to be able to beat them in what they're trying to do. If you're going to buy your first home, you might as well house hack, right? Yeah, I'm probably going to end up doing that. All right, guys, we got 1 minute left of the stream tonight. I got to go do homework now, which, the thought of doing homework right now just hurts my soul. But got to do what you got to do. We got 1 minute left. Okay, last thing we'll do is check the SPRT short interest. SPRT short interest. Whoa. 92? Hold on. $92%? Oh, that is aggressive. Ethan, thank you so much for the super. I really appreciate it, man. Guys, that is going to wrap up the stream for tonight. That's pretty crazy on SPRT. But I will see you guys tomorrow. I'm going to get a video out tomorrow for you guys. I don't know yet about a stream for tomorrow night yet. It might happen, it might not. You guys will see the I'll set it up, schedule it to be early if we're gonna do it. If not, I'll see you guys in a video on Friday, maybe Saturday, maybe Sunday, and Monday too. But yeah. Thanks for the stream, guys. I will see you tomorrow night. Peace.